I don't know if Meta will keep going. My point is that when you buy stocks when you can't lose, now that the stock is up like 50%, there's a chance that they mess up, it goes back down, etc. You don't need to be there for forever. You make 50% in a month. I mean, how much more do you want? Find the next Meta. Don't keep expecting that one stock to carry you for the rest of your life, right? You don't have to always be invested. You know what I mean? It just, if you can just find wins every now and then, you don't need to constantly be winning in the stock market. It's hard to do. Keeping cash, there's nothing wrong with keeping cash. A lot of people act like cash is trash. Cash is king. You got to feel me on this one.
I would not put all my life savings in Tesla or Amazon. Don't put all your life savings in anything. The human compulsion to bet it all is something you have to fight. I've had to learn to fight it myself over the years. It's irrational. It's crazy. Don't bet it all, It's just a simple rule. One simple rule. Well, you can concentrate, but that doesn't mean betting at all. Nothing wrong with concentrating. 20% position, something like that. You want to bet it all on something you can't control. Now, if you control the company, you own the company, that's a little bit different. Then you can diversify within the company. And then if you're buying a company that's very diversified, like Berkshire, then maybe you can think about, well, I'm not buying, once in a while you can make a tactical bet, Marcellic, but you have to, be willing to lose it all, which is very risky. So sometimes traders do it, but it's very, very risky. Soros gets out of trades all the time. He doesn't just double down all the time. He did that once. Don't confuse that for something they do every day over there. I know a lot of people that have worked for Soros over the years. That's not how it works. You can get fired for doing that pretty quickly.
Listen, I heard Elon is getting close to $1 trillion.
Jesus.
We expect him to be the first one.
Yeah, I think he might have a hard time because his stock's dropped quite a bit. But I do think the stock will recover. So it's sort of like a little tricky to know for sure what'll happen.
I think Tesla gained over like $100 billion in market cap in like 2 days.
Yeah, no, Tesla's had a great quarter, and the stock will probably continue to come back. I like the stock. I told all you streamers that completely for free. I'm never going to charge for stock advice. Yeah, large cap stocks are tricky. Meta's one of the biggest companies in the world. So when you play with large cap stocks, like my opinion is you have to move in and out pretty fast. And you leverage the internal rate of return. It's like if you can make 10% in a quarter, that's pretty good because the annualized return of that's like 45-ish%. So there's definitely kind of some benefit for large caps to just make a quick 10%. You don't have to make a fortune. Because you can't really make a fortune, the best that could ever happen is Meta would double, So if you can make 10% in a month or 2 months or 3 months, though, that adds up quite a lot. And 10% in a month.
Yeah, well above 10%. I think you called it around 110, and it's at 150 now.
Yeah, it was a really strong move really quickly. And when that happens, it's a bit of luck, and you just kind of move on. So yeah, Tesla has also done all right since they really got wrecked and it kind of looked like it was a bit much.
What do you think they're going to do about the debt limit?
Yeah, it never really seems to be much of an issue, so I don't think it'll be too problematic. So somebody's asking a very simple question: why would you buy a company for a premium? So that's the tradition in M&A. There's a number of reasons for that. The first reason is that you can't slowly acquire an entire company in the stock market. It's very difficult to do. They are paying in cash. So if you want to buy the entire company, you basically have to come to a negotiated agreement. There's no real great way to do that just in the stock market. You don't just get an E-Trade account and start buying, click, 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 buy. I actually did do that once, but in general, it's very hard to do that with a large company. One of the reasons for that is you have to disclose after you own more than 5% of a company. So once you cross the 5% threshold, you basically at that point are the cat's out of the bag that you're buying the company, or you're trying to at least. So that's one obvious way. The other obvious way is, if you want to buy out a company, you have to be willing to sort of make a good deal that the other company has to have a reason to sell to you. No, you have to do the disclosure yourself, and there have been people who actually have gotten prosecuted for not doing the disclosure in a timely way. Some people try to sneak around the disclosure law by not filing on a timely basis. I did once, when I was doing one of these that was very like secret mission 5% deals, we had, the rule is you have 48 hours to disclose. And we waited till like 47 hours, 30 minutes. I don't think we waited till the last minute, but we were like, tried to use the market every second we can. Yeah, I wouldn't be surprised if Elon Musk didn't disclose everything. But, you know, it's one of these rules that's policed when the SEC kind of wants to police it or when they find out about it. They don't have the tools that they need to perfectly police it. And personally, I don't think it's a very limited, quote unquote, violation. It's really not that the end of the world if the market finds out a week later that you bought more than this percentage or that percentage. But I do think, it's fair. I mean, those are the rules and everyone should play by them. It's fair is fair. Otherwise, you could like corner a stock. And that was the old, if you read about the history of Wall Street, that was kind of what used to happen. When I'm interested in a stock or whatever, like I'm not interested for 10% or, some near-term move. So I'm interested to double or triple my money, so just keep that in mind. I think looking at the stock market every day is probably not a good idea. You want to look at it, if you want to be a true pro, you want to look at it as little as possible. You actually want to be like analyzing as many stocks as possible. Yeah, so anyway, you want to look at as many stocks as you can, as often as you can, looking at as much data and learning, as many stocks and companies and assets as you can. That's the goal of really understanding an industry. There's a lot of different ways to invest, right? I don't have a monopoly on good ideas or anything like that. AMC is not going to the moon, no. I'm sorry. I wish it would for anybody who's long's sake. I wish AMC would go to the moon. I actually think the ape situation was kind of fancy footwork for a CEO that had quite a lot of issues, right, with a crazy shareholder base that demanded a lot of things that he couldn't deliver. They demanded no dilution, even though the company had no cash. So ape allowed him to sort of do the dilution and give them kind of a meme at the same time. So like he sort of had the impossible job of pleasing like a million idiots. Yeah, trading futures is probably a fool's errand for 99.9% of people, and even the 0.1% people, it's pretty difficult. And if professors could trade well, they wouldn't be professors. They'd be billionaires sitting on islands. The nice thing about the futures market is if you do have any kind of edge, it's so lucrative because of the leverage that's implicit in the market. So in futures, you can trade $20 million worth of futures with just a couple $100,000. I remember I was once in college and a professor gave me his resume. That's boss status right there. Like, listen, I'll consider it if you give me an A. It's a real story too. I once also had a professor set me up with his daughter. It's another easy A. Yeah, real recognizes real. I mean, that's just the way it is.
Is it possible to like look at the debt kind of like a company? Like the U.S. makes so much GDP that the debt over like a 20-year period is not much.
You're talking about sovereign debt, like the U.S. Treasuries, or are you talking about corporate?
Yeah.
Yeah. So for
sovereign debt, the corporate debt's like another thing.
Yeah. So the sovereign stuff is weird. There are a lot of theoretical ways to look at this. My friend is one of the first big bond hedge fund traders, and I asked him. This was he was a big deal in the 80s and 90s. It's very weird, the way people perceive relative safety and inflation concerns and stuff like that. It's fairly stochastic. It's not like the stock market where you can kind of like say, well, earnings are up or earnings are down, and that's really it. For a stock, things are a bit crazier, in my opinion, in the bond market, where even though the prices are kind of narrower in the sense that like, a bond can only yield so much and so forth. There is this like very much like, I don't know, voodoo to pricing a bond that's like a little bit hard to do quantitatively or scientifically. It's like very much
Like convexity and duration.
Well, yeah, those are simpler ideas, I think. But like, if you just look at why should a bond yield, say, the Treasury bond specifically, why should it yield 2 or 3%? Typically people kind of more or focus on inflation as like the way to price that, but that's only for the U.S., right? There's plenty of reasons to think that's not a valid way to do it for other countries, and it isn't, right? Brazilian bonds yield a lot higher. They also have higher inflation. So you have both inflation risk and you've got sort of default risk. And default risk for most countries is pretty small, obviously. But it's non-zero. And one of the biggest issues in the bond market has been that the US default rate is perceived to be non-zero, right? That's kind of the general wisdom. And obviously, I personally think that's wrong. I don't think it's non-zero. I think it's very small, but it's not zero. And there's a couple of ways to sort of look at countries' balance sheets. The same way you look at a company's income statements, you look at a country's income statement. And of course, a country's revenue is taxes, and a country's costs, operating costs, or it's things like defense and entitlement and stuff like that, of which we have quite a lot, obviously. So there's ways to look at that, and you kind of look as a country spending more money than it should, or something like that. And I think our country is, but a country can make investments as well. And of course, our politicians don't look at these necessarily as investments. They kind of look at them as requirements and entitlements that are, in essence, required, or which again is to me like very, much the wrong way to look at it. But it is one of these things that the country, views this stuff as like essential for operation. And while I don't disagree that we should have healthcare safety nets and things like that, how much we spend on them is an entirely different matter. Yes, you can look at the solvency of a country to try to get a sense for like, is it possible that there's a default? Which, default is the only way you can lose money in a bond, right? Theoretically, inflation is obviously a way you can sort of have your value of the bond eroded depending on the duration. DCFs will always be widely used. I mean, discounting cash flow is like the core aim of the financial discipline. There's no, you can't really distill finance into anything other than that. I think some mutual funds probably like glance at multiples, some hedge funds, but very few do more than glance at it, I'd say. Some people are just used to the multiple jargon. And if you have steady state earnings, there's actually nothing wrong with multiples as long as they're relatively low. I don't think technical analysis is a good idea. I think it's very old-fashioned voodoo that doesn't work anymore. You want to do real technical analysis, learn Python and do some real analysis. I wouldn't say Renaissance is using TA. Unless you think matrices are TA. I've never seen somebody use linear combinations to do technical analysis. Biotech and pharma, good question, Apollo. And you can always ask me, you're my bro. It's a very stupid distinction. Technically, biotech is anything that uses a biological system to create the medicine. So something like an E. coli or CHO cell. CHO is Chinese hamster ovary. These are cell sort of systems that biotech companies use to make biological drugs, like an antibody or, say, insulin or something like that. Pharmaceuticals is a chemical system. You use your traditional chemical tools like fume hoods and things like that. Different reactors, basic chemical reactions instead of a bioreactor. Testing is another part of the industry. This is just simply about the molecular creation. So any small molecule, say something you can draw, let's look at 𝗕𝗓𝗓𝗬𝗓. This is a best-selling drug, kinase inhibitor. You can draw its structure. This is a small molecule. You can see literally every atom. But if you want an antibody, let's say this drug, 𝗥𝗘𝗖𝗢𝗓𝗦, there's no way you could actually draw its entire structure, at least on a piece of paper, because it's so complex. It is so large that it's 100 times larger. Right? Here's a structure actually. It's 5
I5K. Let me use my software, drug-like, to look at it. There's no software like this on the web that I'm aware of that's available for free, so pretty cool product, PNH. So anyway, this is an antibody, and you can see just how much larger it is, right? So much larger than a small molecule. In fact, I can actually use my software to analyze it and try to find a drug that could, or a molecule I should say, that could go inside of this system and inhibit it. So we recently improved the software so that it now it's embarrassing me, that it works right away. But I think there could be a error with this exact thing. So let me show you maybe a different one. Sometimes you have to prepare the protein a little more extensively. So I just got blue screened in my own demo. Here's a small molecule within this protein. And you can see these small molecules start to work and they calculate the score. These are really low scores. But the protein in the green ribbon is very large. The one little drug, the small molecule, is very small. So that's kind of the difference between a small and a large molecule. Typically you make a large molecule through biological reactions. And you would make a small molecule through chemical reactions. So anyway, this is one piece of software that we have. The other one's Godel, or financial terminal. And you can see this is running on AWS, so it's slowly calculating thousands of different combinations of drugs. You can even calculate a million combinations. I did a 1,000,000 molecule screen a little while back, which was really cool. So this is getting stronger and stronger finds or hits or scores. There's one in 3 dimensions, and you can see the green molecules, the green colored atoms are part of the protein, whereas the kind of gray ones are part of the theoretical potential molecule that could stop this protein. You see it kind of fits like a lock and a key, and it'll start kicking into a second cloud processor that'll go quite a bit faster. So AlphaFold determines the shape of the green protein, but AlphaFold does not calculate what we calculate, which is, will this molecule be a good fit for this protein? So 2 different parts of the problem. The 3D protein folding problem is AlphaFold's problem. This is called the ligand docking problem, which is a search space functional optimization problem. So we've screened 100 molecules, and now I think this is when the cloud processor kicks in, but I'm not sure. We've recently made some updates. Anyway, this is free for up to 10,000 compounds, so you can use it at your heart's desire, and then it's quite cheap, I think, for more molecules. It's about $1 for 1,000 molecules. So you could do 1,000,000 compounds pretty easily with a couple of clicks. Right now, the competition can't do this, as far as I know. So anyway, that's how that works. That's the difference between biotech and pharma, and it's increasingly become irrelevant difference. Pharma, for a long time, was the domain of the industry, right? Whereas biotech was something a couple of companies did. Now all the big pharma companies, they do quite a lot of biotech. So it's not unusual for Pfizer or Merck to actually be more of a biopharma company or biotech company than a pharma company. And you'll see small companies do pharmaceutical research. So sometimes people just said biotech just means a small company, but that's not really the case. So it's kind of a silly distinction. So biopharma is kind of what I like to call all these companies. You're a biopharmaceutical company, not a biotech company or a pharmaceutical company. It's sort of all the same now.
Macroeconomics, the whole point of being a stock jock is that you don't have to look at macro. That's the beautiful thing about focusing on one sector, right? Is that you can abstract all that stuff. I mean, it's really an awesome part of that. And you can let somebody else worry about that. Imagine if you want to work at Citadel. Are you going to tell Ken Griffin that you know how the stock market's going to move? That you are the one person that can tell whether or not the stock market's going to go up or down? They would laugh at you. They would say, oh, that's ridiculous. That's silly. Get out of our office. But if you go in there and you say, I know the most about immunology and immunology biotech, they would say, really? Well, how many stocks is that? And you'd say, it's like 500 stocks. They'd say, impressive. So maybe we can use you to help look at those 500 stocks. Let's sit down and see if you really know what you're talking about. And they ask you questions, and you answer them, and they're impressed. You might get yourself $1 million job or a $10 million job or even $1 billion job. But if you look at the stock market as a whole and you think you can predict if it goes up and down, I think most people say, well, how do I prove that? How can you tell me if the stock market goes up and down? And if you give them a method, well, I look at this and I look at that, they're going to say, I don't think that method is a real method. Because most people, it's been proven over time, and very few people can figure that out. And if you could figure that out, you don't need anybody else's money. Just trade futures and you'll be fine. So I think, the point is that there's no real reason to look at the quote-unquote macro unless you're an economist or, your job is a global macro trader, in which case even those guys, they're doing pretty sophisticated analysis.
Hey, Martin, do you treat service companies and service revenue for biopharmas differently than just a pipeline?
Yeah, of course. Service revenue is very different from product revenue. And most biotech, when people say biotech, at least when I say it, you generally mean drugs, right? So yeah. So I mean biopharma, we're talking medicine. But if you're looking at companies that provide services to the industry, that's a different business, and you have to look at it differently. And some of those can be more valuable than actual pharma revenue because pharma revenue is very short-lived. It's subject to patent expiries, right? Whereas you don't have that problem in services. Now, services are usually lower margin because presumably whatever service is being done, the company that's procuring the service could possibly do that service themselves. If you have a service nobody else can do, that's a nice business. But typically most of these services businesses like consulting or whatever, or even just, manufacturing, contract manufacturing or whatever, contract research organizations, things like that, you more or less can do those in-house if you wanted to and save the margin.
I work in this field. I work specifically in this. I think that there's lots of companies that, they have a technological advantage because they're either academics that spun out and have a niche science and
sure.
Or maybe they're Merck lifers and they're I just want to do CMC work for the next 20 years and they partner with someone who's
great business if you can get it. Of course, typically, one area I'm really, really familiar with is basic chemistry CROs and stuff like that. I mean, typically anybody can do that kind of work, right? You just, you hire a bunch of chemists and it's not hard. But if you're talking about really complex, work like DNA, certain DNA work, for example, that would be extremely hard to do without either significant expertise or really expensive equipment. That's the kind of thing that you can have a pretty good business. But you also have to consider that if there are competition as well. So it's not just the insource versus outsource question. It's also, okay, are there other companies that have this expertise and have set up their own shop? Or are we looking at something that's truly proprietary? And typically, there isn't a whole lot that's that proprietary.
What do you think about antibody discovery outfits? Because they're kind of ubiquitous in some way, but they're also necessary. Because
it's so funny. We've been looking at these kinds of stocks for, 2 or 3, maybe 2 decades. So, virtually all of these companies have been successful over time, which is really funny.
Yeah.
Most antibody startups end up being fairly successful. Now, that's not to say they're all always successful. There's Xoma, there's MorphoSys. There's some companies that didn't make it over the years. MorphoSys somewhat made it.
Some got bought out.
Not really. They merged. They kind of did the acquisition, right?
I suppose. Yeah. Sorry. I need to say they've had things that they've sold. They've sold some pretty powerful drugs.
They've made good antibodies. They have not capitalized on it in the way others have. But at the same time, some of these other companies I'm thinking of, like Medarex or Senecor or others, MedImmune, save MedImmune, a lot of those companies got bought out for valuations that were a lot different than they could have or should have been. The company that made 𝗕𝗢𝗢𝗞, for instance, Cambridge Antibody, is a good example of a company that got bought out for nothing. And then, a number of other sort of funny scenarios that occurred. Like 𝗏𝗏𝗏 is probably one of the greatest deals ever. Bristol Myers bought 𝗏𝗏𝗏. They got 𝗬𝗏𝗧𝗏. They got a royalty on, I want to say 𝗬𝗙𝗎𝗍, and then they also got a royalty on 𝗕𝗢𝗙𝗎. So like the 𝗏𝗏𝗏 deal, if 𝗏𝗏𝗏 is a publicly traded company today, it'd be an enormous valuation.
That's true, yeah. So you think the cat was like undervalued for what it was at the time? I mean, obviously in retrospect it's easy to say, but I mean, didn't they get bought for like 700 mil at the time? And that was like one of the first antibodies, right? So
yeah, it was, in retrospect, Centocor is the same way, right? Like Centocor had a deal with Shearing, and J&J bought Centocor for such a small amount. It ended up getting J&J back so much. I mean, it basically built J&J. Remicade built J&J. The Remicade cash flows allowed J&J to like consistently do huge acquisitions. And it was just such a big cash flow stream. It was like 7 or 8 billion in revenue every year with almost no costs. I mean, it's just an insane, number if you think about it. And it also built NYU's endowment. Most of NYU's endowment comes from their royalty on Remicade. Really a nutty thing if you think about it. But yeah, no, it was one of the best deals ever. For many years, it had 5 to 8 billion of revenue, virtually all cash flow. But the antibody, the last 20, 30 years of antibodies were amazing. I'm not sure the next 20, 30 years of antibodies are going to be amazing because we've got players like 𝗤𝗎𝗓, et cetera, but I still think there's time and room for another, like, say, 𝗟𝗏𝗏𝗧 or someone like that. It's all about the target identification, and everyone's looking for the same targets, and, you are in this very complex game of trying to, get a candidate out in a field or collect these like 3% royalties and a huge number of different targets. And depending on what you do with those royalties, I mean, look at PDL, Protein Design Labs, that didn't do such a great job. Remicade's TNF, the first TNF alpha inhibitor,